All right, let's dive into a really fascinating, high stakes corporate battle, one where the company that lost a massive bidding war actually came out as the real winner. This whole breakdown is based on a fantastic case study by Dr. Chi-Sheng Hu, and it's perfect for anyone studying corporate finance. So let's kick things off with a question that honestly feels a little backwards. You'd think winning a huge deal is a massive success, right? And walking away is a failure. But what if I told you the exact opposite could be true? Well, believe it or not, this is exactly what went down back in February of 2026. Just look at these two charts. That incredible spike on the left, that's Netflix's stock, right after they walked away from buying Warner Brothers Discovery. And that long, painful slide on the right, that's Paramount, the company that won the deal. So what on earth is going on here? Okay, to get to the bottom of this mystery, we've got to talk about a really important concept in corporate finance. It's called the agency problem, and it often leads to this powerful temptation for what we call empire building. So, what is this agency problem? Well, at its heart, it's a classic conflict of interest. You have managers, they're the agents running the show, and then you have the shareholders, who are the actual owners. The problem is, sometimes what's good for a manager's career, making the company bigger and more prestigious, isn't always what's best for the owner's wallets. And when that empire building bug bites, you start to see some telltale signs. Managers start dumping money into projects that just don't have great returns. They get obsessed with growth for growth's sake, not profitability. And what's the result? Well, savvy investors see this happening, and they punish the company's stock price. All right, so now that we have that framework in our minds, let's rewind the clock and walk through exactly how this wild bidding war actually played out. This wasn't some quick scuffle. It was a 5-month-long slugfest. It all started with some whispers back in September, but man, it escalated fast. It became this all-out war with bids and counterbids flying around, all leading up to this huge showdown at the end of February 2026. And get this, the second Wall Street even heard a rumor that Netflix might be interested, the market just hammered them. We're talking about $170 billion in market value. Gone. Just like that. It's a perfect example of what's called a hubris discount, where investors basically say, we think your ego is about to make you do something really dumb, and they price that fear right into the stock. And maybe those investors had a point. Netflix's first offer was a jaw-dropping $72 billion. From the market's perspective, this looked like a huge overreach. It felt like they were straying pretty far from their core business, willing to overpay for old-school media assets. But you can see the appeal, right? I mean, look at what was on the table. We're talking about HBO, CNN, Warner Bros. Studios, the whole shebang. This wasn't just buying a company. It was buying a legendary media empire. You can totally see how that would be an irresistible prize for any CEO. But Paramount wasn't backing down. They jumped into the fight with this win-at-all-costs attitude, peaking with a bid of $31 per share. This is a textbook example of something called the winner's curse. It's that classic trap where you get so caught up in winning the auction that you end up paying way, way more than the prize is actually worth. So, while this massive battle was raging, what did the stock market think? Well, let's just say investors were not impressed with all this ambition. The numbers here really speak for themselves. During the 5 months of bidding, both of the companies trying to buy Warner Bros. Got absolutely crushed. Netflix dropped over 34%, and Paramount, the more aggressive one, they got hit even harder, down more than 44%. Meanwhile, the company they were fighting over, Warner Bros., their stock shot up. The market was basically screaming, "We hate this deal." And then came the big moment. February 26th, Netflix threw in the towel. They just walked away, deciding the price was too high. The market's reaction? It was instant, and it was pure applause. As it says right here, investors were thrilled, rewarding management for finally showing some capital discipline. Okay, so let's dig into what happened right after the dust settled, because this is where the market's final verdict becomes crystal clear. Check this out. In just the 2 days after Netflix quit the race, both of their stocks jumped. It's what we call a relief rally. Netflix went up more than 16%, and Paramount shot up a whopping 33%. But, and this is the important part, those two rallies meant very, very different things. So let's break that down. Netflix's rally? That was a reward. That was the market saying, great job. You were smart, you showed discipline, and you avoided a value-destroying deal. But Paramount's rally? That was just relief.
It was the market breathing a huge sigh of relief that the bloody battle was finally over and that they didn't end up paying even more.
And for Paramount, let's be clear, this victory was a costly one. Even with that big 33% pop, their stock price was still deep in the hole, way below where it was before this whole mess started. They might have won the prize, but now they had the massive headache of trying to integrate two giant companies and deal with all the regulatory hurdles.
So, when we put this all together, what's the big lesson here? What's the key takeaway for anyone studying corporate finance and strategy?
This entire story is like a perfect real-world lab experiment. You see all those theories we talked about, managerial hubris, the winner's curse, the agency problem, they all played out exactly as the textbooks say they would. And it all led to this wild conclusion where the smartest move, the winning move, was actually to lose. The market gave its stamp of approval to the company that chose shareholder value over ego. Which really brings us back to that fundamental question, and it's one you should think about. If you were a shareholder, what would you want? Would you want your company's management to build the biggest empire, no matter the cost? Or would you want them to have the discipline to walk away from a bad deal? It really makes you think about what winning truly means in business.